This is an election. You can, as an LLC, you can say, listen, I'm a single member LLC. I'm going to elect not to be taxed at my corporate level or my LLC level. I'm just going to be taxed at my individual level, and everything that happens within my LLC is going to pass entirely through to me personally and is going to be found and categorized within a Schedule C. Hello, Edward Collins here, and welcome back to another session where we sit down and basically share with you tools, techniques, and strategies that have been tested in the trenches aimed at helping you create real wealth and achieve financial freedom. On today's episode, we're going to talk about a topic that a lot of business owners have been asking me questions about, and that is, what is a holding company, and do I need one within my business? Well, in order to really understand this particular topic, I have to share with you something that's a little bit more broad. If you remember, and if you've been following me with regard to anything that I talk about here on this channel, and with regard to the concepts of tools, techniques, and strategies, I talk about something that I refer to as this real wealth matrix. And it all starts off with something referred to as trusts. Trusts are at the top of my ownership hierarchy. Trusts own everything within my financial life. They own, on the personal side of the spectrum, they own all of my personal assets, things like my bank accounts, any type of personal property, automobiles. Again, I'm not an artist, but they own pretty much everything. Boats. That's a boat supposed to be. But trusts basically own everything within your financial life. And then from there, they also own your business assets. And the very first business asset that I recommend that your trust own is something referred to as a holding company. Now, the holding company, the idea behind the holding company is twofold. One, it creates a management layer over your businesses that you can leverage for tax purposes, but also for just general management, oversight, record keeping, etc. The second benefit of a holding company is it also creates some shielding with regard to anonymity, specifically with regard to where you establish that holding company. But one of the things you need to recognize is that when you're talking about business, you really want to understand that a business has two aspects to it. One, it has the legal structure, that's the technical way that business is formed, and there are a few different ways to handle that. But it also has to do with something that is referred to as the tax election. And you may be saying to yourself, well, Edward, if I had to choose, I'd choose not to be taxed at all. But the reality is, if you live and operate within the United States, you are required to pay taxes on income that you generate over a certain amount. But one of the benefits that the IRS does afford business owners is that you actually do, in some circumstances, have the ability to elect how you are going to be taxed. When it comes to holding companies, and really any company for that matter, there are a variety of ways in which it can be formed. It can be formed as a sole proprietorship. That's where you have really no formal legal structure around your business at all. You're just operating basically in your own name for that particular business. The second way, you could have a partner, but again, in that partnership is a general partnership. And when I'm talking about a general partnership, I'm essentially talking about two individuals, sole proprietors, so they're getting together and just agreeing to work with one another. And there's still no formality in the business structure itself. You may have agreements and legal agreements between the partners, but when it comes to the state, because essentially, it's at the state level, the state really organizes its rules, its laws, with regard to how businesses can operate within the state. And when it comes to general partnerships, there's really no state state oversight on the operations of that partnership. Now, obviously, there may be rules with regard to taxes and what you're allowed to do in general with regard to business, but a general partnership isn't a formal business structure from a legal standpoint and a legal protection standpoint. You can, however, also create something called a limited liability company, or also referred to as an LLC. Now, again, different states may have different terminology for this particular entity, but in general, what this entity is, it is a formal business structure that has layers upon which how it has to operate, what it has to do on a consistent basis in order to be in good standing within the state it's formed. But it is a legal structure that is designed to limit the liability of the business owner with regard to exposing the business owner's personal assets to potential liabilities generated within the business, and potentially vice versa. With regard to the business structures, the business structures themselves, again, you can also form what's called a C corporation, C corp. A C corporation is another legal form of structure that around that particular business. Another one would be S corp. Now, there are also some tax like charitable-oriented business structures as well. I'm not going to go into them here because for the most part, most businesses are not operating in a charitable fashion. They're operating for a for-profit motive. So the business entities that I'm talking here, the five are sole proprietor, general partnership, limited liability company, C corporation, and S corporation. So when you're considering the formation, if you will, of a holding company, the first thing you should be doing is thinking about it with regard to how am I actually going to be structuring this business entity in relation to the rules and laws within the state in which it's going to be operating. Again, that's the formal business structure. The interesting thing that I mentioned earlier is that you also have this capability of considering it with regard to how do you want that particular entity to be taxed. In a sole proprietorship, you really don't have a choice. It's going to be taxed as a sole proprietorship, sole prop. General partnership, same thing. You don't really have a choice. General partnership is going to be taxed, if you will, as a general partnership. An LLC, however, you actually have some choice. So remember, the legal structure is by the state, and the tax election is with regard to the IRS. So when you're figuring out the tax election status, you have to look at the rules of the IRS. And the IRS says that if you are formally structured as a limited liability company, you can elect to be taxed in a variety of ways. You can elect to be taxed as a sole proprietorship, meaning if it's just you, a single member LLC, so a sole prop. And essentially, the way the IRS talks about that is they talk about it in the terms of a disregarded entity. A disregarded entity. And again, this is an election. You can, as an LLC, you can say, listen, I'm a single member LLC. I'm going to elect not to be taxed at my corporate level or my LLC level. I'm just going to be taxed at my individual level, and everything that happens within my LLC is going to pass entirely through to me personally and is going to be found and categorized within a Schedule C attached to my 1040. So that's an election. You can, however, as an LLC, elect to be taxed as a C Corp or taxed as an S Corp. And there are different reasons why you may elect to be taxed in a way that's different than the LLC methodology. You also have considerations if you have multiple members of that LLC, meaning more than just you, that are partners within that particular enterprise. But even in the case of a multi-member LLC, you can also elect to be taxed in a way that's not taxed as a partnership. You can still elect to be taxed as a C Corp or as an S Corp. And again, there could be multiple reasons why you would want to do that. And if you want to find out some of those reasons, be sure to check out some of the other videos that we have here, because we do jump into some of the reasons why you may want to elect to be taxed as an S Corp or a C Corp, for instance. But again, this election process is you filling out a form with the IRS, telling the IRS, I own this particular type of legal business structure, and I would wish to be taxed as this type of structure. And again, once you file it, then you actually handle your bookkeeping and tax records in accordance with that particular election. So let's get back to, however, why you may wish to be taxed or set up your holding company in a certain way. And again, just as a reminder, that structure is starting off at this top level with trusts. The trust is going to own a holding company. And what you would do is you would have your holding company go out and own all of the other businesses that you may be operating. They could be active businesses, meaning if you're actively engaged in, for instance, a trade. For instance, let's say you're a dentist and you're performing personal professional services. That's a business. So business one. Maybe you also own a billing company. Or a collections company that's associated and works for other dental practices. That could be another active business, a collection business. But maybe you also own the real estate in which your dental practice is located. So then that's some sort of real estate oriented business. Now, most real estate businesses are going to fall on the passive side of the spectrum when the IRS is dealing with it from a tax standpoint. But for the purposes of this discussion, we're just talking about the holding company. The holding company is going to be that entity, that layer between your businesses and you. So the holding company is the thing which connects, if you will, your businesses to you. And some of the benefits of operating this holding company really come into play with regard to why you're putting it in there in the first place. So as an example, the way I use my holding company is I essentially want to try to minimize and make my life as simple as I possibly can. One, because I like simplicity, and two, I believe that simplicity leads to amazing possibilities with regard to profit, because you don't really need to be complex in order to win the profit game. In fact, the more complex you are, oftentimes you're losing the profit game. The key to winning profit game is really to find simple things that work and then just duplicate that. And when it comes to a holding company can actually add simplicity, even though you're adding a layer of formal structure in between you and some of the other businesses you operate. And the way I do that is by having the holding company own the other businesses that I own, and just having these businesses, even if I select them as LLCs as an example, I just elect that they be treated as disregarded entities, and doing so means all of the revenue, all of the activity of each of those businesses flows up to the holding company, so that I do not have to file tax returns at these individual business levels. What I get to do is I get to file one tax return at the holding company level, really simplifying my life, because again, I own and operate multiple businesses, and I actually encourage other business owners to do the same. If you look at the statistics, the vast majority of multimillionaires in the United States, multimillionaires, individuals who are earning more than seven figures, meaning at least more than low seven figures, multiple seven figures a year, the majority of multimillionaires in the United States have multiple streams of income. On average, they have at least 7 streams of income. Now, if you are getting those streams of income from different businesses and you actually have to file tax returns for each individual business that you're operating and generating revenue from and getting income streams from, that can become a nightmare with regard to tax reporting, tax accounting, the cost that's associated with tax preparation services and the like. But having it done at the holding company level, it dramatically decreases the amount of work, effort, and energy that you'll have to put into figuring out how to tell the IRS what's already happened. You just do that at one level, at the holding company level. The other benefit of having the holding company be the thing that really aggregates, if you will, the business activity from all the businesses below it, is that you can get scale by leveraging all of those different things and taking advantage of tax deductions at the holding company level that you may not otherwise be able to take advantage of at the individual business level. Let me explain. Your holding company can be the entity that's responsible for handling all of the management, if you will, of those individual businesses. And as such, you could take advantage, or at least more fully advantage of, things like the home office deduction, or the administrative, more specifically, the administrative home office deduction. It also gives you the capability, depending on how you establish that holding company with regard to the actual formal legal structure and then the election, the tax election status, you could take advantage of other forms of deduction with regard to things like potentially a medical reimbursement plan or some other form of accountability plan. Now, all of those other topics are topics that are absolutely worth diving into, but they're a little bit too robust for this particular presentation. So what I would encourage you to do is, if you are interested in continually figuring out how you can pay the absolute minimum that you're required to pay when it comes to taxes, be sure to hit that like button, that subscribe button, that notification bell, to be sure to be informed of the next type of video that gets dropped, or the next type of training. Or better yet, just jump in the channel and start scrolling through all the different videos we have in place, because I'm confident that if you do so, you're going to find something that not only that maybe you were not aware of, but can absolutely have a materially positive impact on your personal and financial life going forward. I wish you well in your journey, and I can't wait to see you on the next episode. Bye for now. Frozen.